Guys, the stock market is skyrocketing after the Federal Reserve has decided to pause the rate hikes going forward. We are going to have to dive in to see what's going on. We also want to talk about a very special earnings report coming out at 4 o'clock, and that is PayPal. In addition to that, WeWork is crashing. Allegedly, they're filing for bankruptcy on Monday. It's going to be a very, very big day. I'm Mo. Paul is on vacation. We are going to get into it. There's a couple of other pieces of news that I want to share, so let's go. And do me a favor real quick and smash that like button. Okay, the first thing we want to get into here is the Federal Reserve press release. So today they put out their FOMC result of the last 2 days, and Jerome Powell spoke at 2:30. The biggest news here, and which was predicted, if you looked at what the predictions were out there from the market, it was a 97% chance that rates were going to remain the same, 5.25% to 5.5%. And as you can see, the Fed fund rate has stayed the same. And I think this is a couple of things fold. Number one, CPI is coming down. That is, there is no other way of spinning it. If you strip out inflation of food and energy, which is incredibly volatile, and that's why they strip it out, you know that inflation is coming down. Now, the argument is going to be made by me, and frankly, probably you. Your life is not getting cheaper. Things are very, very expensive out there. Building costs are up. Food is up. Gas is coming down, but still up off of the $1.50 it was a couple of years ago. So there's a lot of things that they can say, yes, we do have reason to stay the same. I also think that it's the psychology of it. They don't want to raise interest rates going into the holiday season. We just had Halloween yesterday. Now we're going to be going into Thanksgiving. We're going to be going into Christmas. Even though they want to kind of cool off the consumer, Jerome Powell has been very explicit. He says, I want to cool off the consumer. We have to cool off the consumer spending, which clearly we're not doing. And we need to get the unemployment number to start going a little bit higher. Neither of those two things are happening, which is why I was very surprised to not see an increase in rates. I thought we might get a quarter-point surprise, but that's not the case. I think it's the optics of it, not raising rates before the holidays. Okay, so that is the big Fed news. Now let's get over to some stocks. So we had some earnings come out. Aside from PayPal, we're going to talk about CVS and AMD. And as we can see here, AMD had a very, very big day. They were up nearly 10% today on their earnings report. They announced third quarter revenues of $5.8 billion, gross margins of 47%, operating incomes of $224 million. Now let's get down to some comparisons here. So revenue, looking at quarter over the previous quarter, they did have an increase in revenue. It was actually quite surprising to me. Gross profit increase, a 17% increase. Now let's look at those margins. So margins continued to increase for AMD. And you remember in previous videos, we've discussed this. Are they going to be able to sustain these margins? And this is for all of tech. This is for all of the chip industry. And are they going to be able to continue to grow this revenue? Remember, we had that very, very big spike that happened throughout COVID. Are we able to continue that revenue? AMD is showing, yeah, we're able to continue that revenue. So that's one big company that reported. Another one is CVS. Let's check out CVS. They reported earlier today. They had a pretty flat day, to be honest with you. Let's see what they came in reporting. And again, I love these comparison charts, and look at that. Total revenues. They just crushed the operating income. They had a loss in the previous year. Big jump there in operating income. Do they have any big highlights here? Because I know what they have been trying to do is they've been trying to work on these health hubs. I've been seeing them sporadically around. Comment in the comments below if you've seen these health hubs around. I've seen probably 2 or 3 around where I live. And they're really trying to get into that kind of primary care where you can go in and you can see an actual doctor at a CVS facility or a qualified nurse practitioner to do more than just get a flu shot or a booster of some sort. They actually want you to go there for maybe a physical or something like that. Oh, in 2023, launched Cordavis, a wholly owned subsidiary. Oh, that's going to work in the biosimilar market. So basically what a biosimilar is, and this is going to become very, very big in the world of medicine. Let's take AbbVie, for example. AbbVie has a drug called Humira. And what Humira does is it targets something in the heart. Doesn't really matter what it is. What a biosimilar does is it gets to the same result by a different mechanism of action, a different way of getting to the same point. And they can come in and undercut drugs like Humira and those alike. So biosimilars are becoming very big, and it's very interesting to see that they are getting into that world. So that is what we're seeing with those two big stocks. Now remember, guys, We are going to be having a very special guest on the show next week, and we're actually going to see him in person, going to do an interview in person, and that is the highly requested Guy Spear. We're going to New York. We're going to be having a sit-down conversation with Guy. It is going to be absolutely fantastic. Now, guys, speaking of New York, a big company in New York has a lot to do with New York, and that is WeWork. At one point, they owned almost if I'm not mistaken, it was the most real estate in New York City. And that was kind of around COVID that it was up and coming. If you have not watched the show We Crashed about Adam Newman on Apple TV, please go and do it. It is one of the best shows of the year. It is absolutely phenomenal, and it is about the rise and fall of WeWork. Now let's go and look at WeWork. Again, they're going to be filing for bankruptcy next week. They were down 47% today. 47%. And the whole premise behind WeWork was to have rental office space where everybody kind of works together. No matter if I wanted to go to rent an office and you wanted to go rent an office, we would work in the same office space. It was a very interesting concept. Guys, look at this high. Can we just look at this real quick? All-time high. October of 2021, 2 years ago, about $600 a share. Today it's at $1.21. And there were probably people out there telling us that we had no idea what we were talking about when this was $600 a share. We were probably being criticized left and right at that point. Now it's $1. What are you going to do? Now what do you want to say? Okay, now let's go over to PayPal, and they just reported earnings. Alrighty, let's see what they did. Earnings per share of $1.30, beating expectations of $1.23, and revenue coming in $7.42 billion, beating the expectations of $7.40 billion. That's a beat on top and bottom line for a company that is dead, as a lot of people are saying. They also named a new CFO, and people on Twitter are saying, are we going to see a dividend now? I don't understand why you would want a dividend now, but that's the thinking of most investors out there. But anyways, that is a beat on top and bottom line. They're up about 2% right now. Let's go over to quarterly results. All right, Q3, total payment volume. Wow, nearly $400 billion, growing 15%. Net revenues of $7.4 billion, growing 8%. GAAP operating income of $1.2 billion, growing 4%. Non-GAAP operating income of $1.6 billion, growing 8%. This is looking, operating cash flow of $1.3 billion with free cash flow of $1.1 billion. Here's what I was talking about, appointing Jamie Miller, the CFO, effective November 6th. So that begins, I assume, next Monday. Just looking at my calendar briefly. We talked about these big numbers. Look at these total payment volumes. Unbelievable. And this is a company, guys, that has been absolutely abused. Let's look at it real quick. This is a company that was $310 a share in July of 2021. And I remember distinctly, Paul has said this so many times, people said that we didn't understand PayPal because it was $310 a share. Well, now it's basically $50 a share. What, do you still not understand it? And if we look here, if we start going to the income statement, our revenues are just increasing. They made record revenue in the last year. If we go quarter by quarter, they set a quarterly record of revenue. So this is a company that people are saying is dead, setting quarterly revenue numbers. Also, record profits. Let's go to our 4 quarters. This is a company which has increasing profits. It's almost at record profit last year, and their highest level was just after COVID. So this is a massively undervalued company based on the assumptions that we are making as a channel. I do not own this right now. Paul does. Doesn't mean you should go buy it. Doesn't mean you shouldn't go buy it. You guys do your own research and understand what you're buying. That's the biggest thing here, especially when it comes to companies like PayPal. Okay, so one thing I want to do with PayPal, just because we talk about it all the time, you can see it's on my watch list for $50. Almost got there. It was about 25 cents away, if I'm not mistaken. Let's see what my last stock analyzer was on PayPal. It was just in September. And I want to see if I believe these numbers still. So I'm going to look and say revenue growth, I put in 4, 8, and 12%. And I do think that those are pretty good numbers for assumptions. Let's say they don't do very well over the next couple of years, over the next decade. Do 4% revenue growth. I could see that. As other countries start to use more PayPal, and we love PayPal in the United States, obviously, if you look at their total volume of transactions, people are going to use it. I could see 4% on the low end. 8% in the middle, and if they absolutely crush it, 12% on the high end. Profit margins of 12.5, 15.5, and 18.5. I still like it. Free cash flow margins of 17, 20, and 23. I like it. PE and price to free cash flow of 16, 18, and 20. I could, if somebody were to argue with me, you could say I could take my PEs up to 18, 20, and 22. I would not disagree with them. But I'm going to keep it what it is right now. And 10, 12, and 14%. Click analyze here. My low price is $51, basically where it's at right now. And 147 on the high, 120 on the high as a multiple of earnings. So everything lights up green, but as you can see, this doesn't mean for me, just go buy. That's not what I do. I have to do a little bit more research on my own. But as these prices are getting more attractive, as they just had another quarterly, very strong beat, I should say, it's making me more interested. It's absolutely making me more interested. Now, a couple of other stocks that I want to talk about. We are going to be making a community video for Enphase. This has been a stock that has been absolutely abused over the last couple of weeks. A lot of people are talking about it. For those of you that are not in the community, we are offering a 7-day free trial. Sign up at the link below, jump in, see what we have to say about Enphase. Go run some of your own stock analyzers, try it out for 7 days. I promise you, you're absolutely going to love it, and go chat in the community with other people. Now, also, when we are going to be coming out with more of these earnings videos tomorrow. We have Palantir and Apple at 4 p.m. So look for that video. All right, guys, I will see you tomorrow for those two stocks at earnings. Have a great evening.